Among the companies that make up the financial services business are those that are active in a variety of different markets, including banking and capital markets, insurance, and asset and wealth management corporations. Although the nature of the business that each company engages in is unique, the following are typically included in the scope of financial services. Asset management is the process of managing assets and investments for retail and institutional clients, including financial instruments like stocks and bonds, real estate, and other assets. In the context of retail clients, wealth management refers to the provision of services such as financial planning and investment strategy to maintain and increase their wealth. Small and medium-sized businesses. Financial services include checking and savings accounts, personal and small company loans, credit and debit cards, and other financial products for individuals and businesses. Banking services are provided through both traditional branch locations and internet banking platforms. Corporate financing, trading, risk hedging, underwriting, market making, and mergers and acquisitions consulting services are some of the goods and services that wholesale banking provides. Wholesale banking acts as a middleman between corporate and institutional clients. The difference between asset management and wealth. There are a lot of people who use the terms asset management and wealth management interchangeably. Although there is a strong connection between the two, there are key differences that set them apart from one another. An individual receives guidance that is tailored to their current financial situation as part of a comprehensive service known as wealth management. This service goes beyond the realm of investing. Management of assets, on the other hand, is primarily concerned with investments and assists clients in selecting the investment vehicle, portfolio composition, and asset allocation that are most suitable for their needs. In layman's terms, asset management firms are the manufacturers of investment products, for example. BlackRock is the leader in exchange-traded funds, ETFs, through their iShares products, whereas wealth management firms are the distributors of these investment products to end clients. For example, clients can purchase iShares on the RBC Wealth platform. A chain of value. 4 fundamental components make up the full-service wealth management value chain, each of which performs important underlying functions. Acquiring new customers through marketing. The sales. The planning and distribution of provisions for the wealthy financial planning and advisory services. Goods and offerings of services. Wealth management companies provide clients with solutions that are both comprehensive and individualized in order to fulfill their wealth management requirements. The client's level of wealth, their investing mindset, and their preferences regarding digital versus in-person connection are the primary factors that affect the competitive positioning of a business. When it comes to wealth services, the whole suite often consists of the following, which normally takes place inside the planning and allocation component of the value chain. Budgeting for wealth administration of investments, services related to trusts and estates, planning for taxes, the planning of succession services of a concierge, banking and lending insurance companies. To enable the wealth manager to provide investment management services in a manner that distributes client funds to a portfolio of assets that suitably meet the client's risk tolerance and investment return objectives, a wide choice of investment products is typically offered. This affords the wealth manager the ability to provide investment management services. From low-risk and low-return alternatives to high-risk and high-return options, the following investment products would normally be accessible, and they are listed below in the order of their availability. The cash and the equivalents of cash. The accounts and funds of the money market. Investment certificates for guaranteed returns, known as T-bills, treasury bills. Unchanging income bonds issued by the government and firms. Mutual funds that invest in debt, equities. Stocks, exchange-traded funds. Mutual funds that invest in equity. Alternate options. Commodities related to real estate. Funds that are private equity capital for startups and startups, model of the business. There are a variety of expenses that wealth management companies must bear to run their businesses, with distribution and technology often being the most significant cost drivers. Distribution methods and channels. There is a vast variety of distribution channels that make up the wealth management landscape. These channels range from high touch, which refers to client-tailored advice with a large range of investment products, to low touch, which refers to standardized advice with a limited selection of investment goods. Included among the primary distribution routes are large financial institutions or independent businesses that offer wealth management, private banking, and trust services to high net worth customers are examples of private wealth management enterprises. Comprehensive brokerage services. Large financial institutions or independent businesses that function as full-service investment dealers and offer a diverse range of investment goods, including securities, deposits, and other types of investments. Non-bank financial advisors include financial advisors who distribute various financial products for insurance companies, mutual fund dealers, and securities dealers. Advice from the branch. Bank branch advisors are individuals who offer services related to investing and financial planning, often to clients who are wealthy. Directly branch off. Advisors who work directly with customers at bank branches and offer products such as savings accounts, term deposits, and mutual funds on demand to customers who have deposits. Auto-advice technology and direct sales. In addition to robo-advisors, fund managers who sell their services directly to investors. Discount and online brokerage services. For the sole purpose of execution, OEO. Financial advisors who cater to do-it-yourself. Investors and active traders, albeit providing a relatively smaller number of services. As a matter of record, personal investment management, financial advising services, and planning services are all integral components of wealth management, which is a professional service that integrates these elements directly for the benefit of clients. By contrast, institutional or prime brokerage, asset management, and banking are not included in this category. These days, wealth management services are provided by a diverse range of companies. Large financial institutions, in particular, are making significant investments in their wealth management departments in order to diversify their sources of revenue. The resilience of wealth management revenues and the sector's relative immunity to macroeconomic shocks make it an attractive complement for financial institutions that had previously focused their attention on trading or investment banking. This is because the global financial markets continue to be under a great deal of uncertainty. Don't forget to like, subscribe, and leave a comment below. Your support helps us create more amazing content just for you.